Welcome to the Crypto Prism channel. Let's take a look at Bitcoin's latest market structure. Let's review the 1-hour chart of Bitcoin. From the chart, we can clearly see that after reaching the recent swing high at 97,917, Bitcoin experienced a rapid and deep pullback. Price is currently hovering around 69,233. It is consolidating between the key Fibonacci 0.236 and 0.382 levels of this decline. The significance of this range is very clear. The resistance at 0.382 above is the first major defensive line for the bears. If price can break above this level with expanding volume and successfully retest and hold it, that would indicate that the rebound momentum has gained market recognition, giving bulls the opportunity to continue pushing higher, potentially challenging the 0.5 and even the 0.618 prior high congestion zones. The support at 0.236 below is the short-term lifeline for the bulls if this level is broken with strong volume, and any rebound fails to reclaim the range. Then the current move can only be defined as a weak bounce. Bearish forces would regain control, and the previous low near 59,966 would become the next key downside target. At this stage, the core strategy is to wait for confirmation rather than predict direction. Within the 0.236 to 0.382 range, bulls and bears are repeatedly battling, and this is where stop hunts are most likely to occur. Therefore, avoid chasing breakouts or selling breakdowns in the middle of the range. Wait patiently for a valid breakout or breakdown, with volume confirmation before entering, which is far more prudent than preemptively betting on direction. Now, let's take a look at the 4-hour trend. Price is currently hovering around 69,263, right near the Fibonacci 0.236 key level of this decline. Below lies the strong support at the prior low cluster around 59,982. Above, important resistance levels are stacked at 0.382, 0.5, and 0.618. The significance of this area is very clear. The 0.236 level above is the first hurdle for the current rebound. If price can break above it with strong volume and hold, it would signal strengthening bullish recovery momentum. Further upside could then target the 0.382 and 0.5 prior high congestion areas. If multiple breakout attempts fail and volume continues to shrink, the rebound strength is limited and a return to weakness should be anticipated. The prior low at 59,982 below is a key midterm defensive level for the bulls. If it is broken with strong volume and the rebound is weak, it would confirm a midterm bearish structure, opening further downside space. Conversely, if price repeatedly finds support near 0.236, with gradually expanding volume, a stage bottom could form here, building momentum for a rebound. At the current 4-hour time frame, the market remains in a post-rebound consolidation phase, with intense bullish and bearish competition. Operationally, avoid blindly predicting direction. Wait for a confirmed breakout or breakdown with volume validation. If 0.236 is broken and successfully retested, follow the bullish momentum. If the prior low at 59,982 is broken and rebounds are weak, follow the bearish trend. Now let's look at the daily trend. From the chart, we can clearly see that price is hovering around 69,244, currently trading below the key Fibonacci 0.236 level of this decline. Below lies the strong support at the prior low cluster around 59,781. Above, key resistance levels are located at 0.382 and 0.5. The significance of this level is very clear. The 0.236 resistance above is the first major hurdle for the current rebound. If the daily chart can break and hold above it with expanding volume, it would indicate that bullish recovery momentum has been recognized by the market, allowing price to challenge the 0.382 and 0.5 prior high congestion zones. If multiple breakout attempts fail and volume continues to contract, the rebound strength is limited, and a return to the bearish downtrend channel should be anticipated. The prior low at 59,781 below is a key midterm defensive level for the bulls. If broken with strong volume and rebounds remain weak, it would confirm a midterm bearish structure, opening further downside space. On the other hand, if price repeatedly finds support near 0.236 with moderately expanding volume, it could form a stage bottom here and build momentum for a subsequent rebound. At the current daily time frame, the market remains in a deep pullback followed by a consolidation base building phase with intense bullish and bearish competition. Operationally, avoid blindly predicting direction. Wait patiently for confirmed breakouts or breakdowns with volume validation. If 0.236 is broken and successfully retested, follow the bullish trend. If the prior low at 59,781 is broken and rebounds are weak, follow the bearish trend. Before clear signals appear, controlling position size and waiting for confirmation is more prudent than making early directional bets.